Good afternoon, traders. It's Bill Baruch with Blue Line Futures. It's your daily midday market minute. We got a lot of selling going on in equities. The S&P is now retesting that Thursday night, early Friday morning low area, 4270 to 4290. That's a big level of support. It's a rare major four-star support. We don't want to see it close below there. And if it does, we did trade in the 4260s on Friday's session and again here on today's session, but we're really looking down to about 4230 or so from there. Now, this is really tech leading the way lower. Obviously, Facebook, a lot of social media stocks getting hammered on all those narratives, but we're looking at support 14,250, 14,290. Starts getting through there, we're looking at 14,000. So tape is real heavy, but the Russell 2000 holding a bit better. It's basically at the top end where the rally really began on Friday morning, late morning, early afternoon, 2210 area. Some good support building in there. As you start moving into that, you get the 50-day and the 200-day moving averages converging too. So keep an eye on that in the Russell. But we like cyclicals. We like the Russell. We like the more cyclical story here in the quarter four. So keep an eye on that where tech is going to be a little bit more heavy. So it's not just interest rates now. You got the social media narratives weighing on things. But today is really a commodity story. You got crude oil trading the highest point since November 2014, breaking out above $77. We're looking at crude oil, that initial high early last week to that low through the middle, late part of last week, giving you a range. That range, as this breakout, should provide power to about 80-20. Look for that. We want to see constructive closes. We see this thing, make sure it closes and settles today out above $77 to really give that move. The U.S. dollar is a bit weaker. That's helping power commodities. And that's, yes, that is a tailwind to crude, but you have the OPEC Plus committee staying their path of adding 400,000 barrels per day here in November and each month going forward. So that U.S. dollar lifting crude, but really also it's helping gold because you got treasuries lower, which would typically weigh on gold, that U.S. dollar weakness. Gold was lower overnight, and now it's moving back up to new session high, 1770 area. And this is if we can close and settle good today, should be able to power gold to 1782, 1785, and that's a big battleground. Silver doing pretty well too. We'd love to see a little hammer pattern here on the daily chart, the daily bar hammer formation would give you a bit more to follow through into tomorrow. So we like gold, we like silver, especially with this dollar weaker. But if you get the treasury start to bounce, then you can really see gold rip potentially. So keep an eye on all that. Our trade desk is here, help you walk through risk management, talk through some of the things you're watching in the market. Give us a call, 312-278-0500. Remember though, futures trading involves substantial risk of loss. It is not suitable for all investors.